there's a button on the bottom.
There we go.
Nailed it.
Hey guys, Chad Hallett, Captain Mortgage, coming back to you with another episode of Whiskey, Wisdom, and Real Estate. And today I'm drinking Yellowstone whiskey and bourbon. No, it's not popular because of the TV show. It's actually I think it was like a, goodness gracious, like 1854 brand of bourbon. And they, in 1872, they gave it the name Yellowstone. And survived all the way through Prohibition. So pretty good deal. Today I'm here with my main man Corbin, who is making me drink alone.
I know I got no bourbon here unless you want Kentucky
Swear.
Gentleman. I have Kentucky Gentleman, but I don't know if folks really want to learn about Kentucky Gentleman.
Can't be as bad as Military Special.
Nah.
So I just had I just signed an agreement with a new office down in Chester, Virginia, and I celebrated by giving flowers to the wives / owners, and then to the men,
Yeah.
I gave a handle of Military Special, which if you don't know, folks, it's that's what your grandpappy would start his tractor with. It's pretty good.
I mean, that's what made KG. You got to bend all the way over to pick that up.
Oh yeah. So tell us a little bit about yourself, Corbin.
So man, I'm born and raised here in Spotsylvania. I'm the lonely old insurance guy. I own an insurance brokerage called a Capital Agency. Broker pretty much any personal lines, working on getting our commercial. We're actually, I don't know if you know this, Chad, we're starting a separate company. Later this year, we're going to branch off from our Goosehead franchise and start a commercial entity that can sell anything commercial. So
look at you.
I know, well, we had
making moves.
Yeah, we had to work with Goosehead to get an amendment to our contract so we could do it. So we just kind of got that done, and now we've got to go out, fly out, and do some training. We'll be rock and rolling.
Man,
that's it. I'm married,
big
3
time.
kids.
I'm gonna be cleaning your guys' pools pretty soon.
Oh yeah, right. I got no room for a pool out here, man. You got all the room.
Oh, well, country living. Don't be afraid of it.
Oh, I'd go back in a heartbeat. I'd go back to Partlow. Snap
Well,
everything.
you're welcome over here at the homestead anytime.
All right, I'll move in the garage.
Tell the boys they can feed the cows for me, and you and me can have a couple of drinks in the barn / man cave. But,
oh, they'd be in it, man. They'd love it. They'd love to come see the animals. What I mean, especially summer's coming up, we can set something like that up.
Yeah, for sure. So married, 3 kids.
Married, 3 kids.
Insurance broker. What states do you guys cover right now?
So we can cover right now. We can write in Virginia, North Carolina, South Carolina, Maryland, and DC. We're going to currently, Jeff's actually working on, Jeff's my business partner. He's working on West Virginia. We're going to try to get into Pennsylvania, maybe down to Georgia. Just kind of start to take over this East Coast, really.
Hey, look at you. That's a good deal. I'm licensed in a lot of the same states, so I always take care of you, my brother. For those of you that don't know, I don't like change. I'm not big on change, but I do love saving money. So I told my wife to please reach out to Corbin, see if he could save us any money last summer. And he did so good on the first policy that we ended up switching everything over. So our primary home, investments, vehicles, just about everything. So
we appreciate it, brother.
Hey, absolutely, dude. And that's like I texted him the other day. I was letting the kids drive the farm truck. I probably could have used some additional coverage.
We're gonna up those limits, man. I've already working on
it. Yeah, that's all right, buddy. But yeah, I appreciate you jumping on the show today, and I appreciate you taking the time to talk to us and all that good stuff. And for those of you wondering, this bourbon's actually pretty good. It's the first time I've had it. I got this as a gift from a realtor partner of mine, Eddie Velez, down in Chester, Virginia. He's a realtor with the One Dream team via EXP. So one of my top partners and brother from another mother. We're both from the Army, so we have similar personalities and such. But
I've never tried that whiskey. I've never heard of that whiskey before.
I hadn't either until he brought it over. It just looked like a fancy label, and I assumed that it was just a one-off because of the TV show being so popular.
Yep.
That may have contributed to the cost, but
yes,
like I told you in the beginning, this brand's been around for 150 years, something like that.
Yeah.
So
that's impressive.
So yeah,
I mean,
yeah.
I'm sure it's definitely helped its popularity with that show coming out.
Oh yeah, I'm sure I'm sure
Yeah.
their price point went up a little bit.
Oh, they're gonna
Profits
reap
went
those
up.
benefits.
But before
What
we
do
started recording here, old Corbin and I he asked him about our golf
I?
tournament on Monday.
Oh,
So we always do charity golf tournaments, and he was on my team for the Builder Association here in Fredericksburg, and we won the most honest award apparently.
hey
So we
man.
came in dead last, and I don't know if they meant it as a joke or they're sincere, but they offered us a free foursome because we were the most honest.
Yeah.
Um, which I do assume a lot of people,
Oh yeah, man.
cheat. I don't think it's a big conspiracy or anything, but I think people just don't want to look bad. And then there's probably one or two that are actually competitive, and
Yeah, your
they're
boy Dave, man. They fudge the numbers a little bit, Gets
oh yeah,
close to the hole, that counts.
yeah, that kind of thing. It's not a big deal. Like, I could
Yeah,
care less. That's why I
me
like
too.
being honest. Because if I come in last, it's whatever. It's something to laugh about, post about, and
Oh
this
yeah.
sales game is. It's all about getting in front of people, making people laugh, and connecting. So,
And we had a good time, man. I had a great time out there.
oh yeah, you basically carried the team.
Oh man, that's the thing. That's what I say. If I'm the best of a foursome playing golf, that's not good
A
for the team.
bad day. Well, I think hopefully Jamal listens to this and hears me busting his chops. But Jamal Darian had told me he was a good golfer.
Oh yeah.
When he got out there the other day, he looked like he hadn't swung a club before.
Oh, dude, that was his second time golfing. He told me.
Is that what he said?
Yeah, he told me it was the second time ever golfing.
No, nobody ever. Man, Darian was talking trash, I guess. If I knew
Yeah.
that, we would have coddled him a little bit, give him some advice. I didn't want to step on his toes.
Oh yeah, no, he said that was the second time he's ever been out there. Next time we gotta get Jeff out there too, man. You gotta see Jeff play around a golf.
Jeff play good.
He plays.
He
He would
plays,
fit
huh?
right in.
Yeah, he'll do some drinking at least, right?
Yeah, he's there
Yeah,
to hang out, man. He'll have a couple beers and just swing a
yeah.
golf club,
We'll
He won't
invite his
necessarily
favorite
golf.
lawyer over. Huh?
Yeah, that's what I'm here for, man. I'm here.
So for those that don't know, Corbin actually was an attorney before, went to law school and all that
I
jazz.
still am too. I keep it active. I just do mostly side contract work because I've
Yeah.
partnered with some businesses around town. And so they were just my clients. So I just kind of kept them. So I just, like I said, I just do small contract work, maybe some small estate planning for family and friends. But um,
Gotcha,
so, my main focus is this business now.
gotcha.
Law practice ain't for me.
Well, I was just gonna say that, because you're an attorney, every time I'm having trouble sleeping, I just give you a call and tell me a
That's right.
story and stuff. So.
That's what I'm here for. And I'm always awake too, man. I'm always awake.
And we always talk to your boss lady about contract law, right?
Hey, I will. Well, like I told you, Friday was a payday.
Friday was a payday. Good deal. Good deal. Oh man. So turn it around and get back to real estate a little bit.
Oh yeah.
What did you what's your experience been in real estate? From my understanding, you've bought and sold, and you guys have owned some investment properties. I don't remember if it was just land or if it was homes as well, but
It's been a mix. So I'll say real estate's the single best investment you could ever make. I mean, I'm not a big stocks guy. I've been on buy stocks in there, but for me, a tangible asset that appreciates year after year is obviously the best for me that they don't make it. So like you can't just pick up land somewhere. So I know it's going to maintain, or at least it'll not just maintain, but likely increase about 3% a year. So I bought a piece of property, my first house, and this is one thing I actually gave a presentation on this in law school. I took real estate law, and one big thing for first-time homebuyers is your first house is, if you look at the percentages or the odds, it's not going to be your forever home. Like this is your starter house, which is great for today. So take time to look and kind of do some research on buying a piece of property as from the mindset of an investment. So when I bought my first house, what I did is I pulled the county plans and I found out where they're developing. So I just pulled their 5-year master plan, found an area that they had a kind of marked for something they wanted to develop into, and I bought a property right there. Bought an acre of land with 3-bed, 2-bath house on it, little one, 2-car garage, and it's paid off. It's paid off my law school loans, my undergrad loans, and I used that to also buy more property. So I used it to buy, then convert it. It was a smaller house, but I was able to go debt free now. Take that money, then buy a townhome that I kept for about 3 or 4 more years. And then I sold that, essentially sold that, and then now use it to fund this business. But I do still own about 15 acres in Locust Grove area, right at the Orange County line. We bought 15 acres. Another cool trick. We took 401ks from our old companies me and my wife used to work for that were just kind of sitting, piddling around, actually losing money. We converted those to self-directed IRAs and then used that self-directed IRA to pay cash for those 15 acres. So we didn't have to really come out of pocket with anything. And it's all tax-free because it just transfers to another investment account, retirement account. And then boom, you can use that to buy property cash. Because like I said, I trust land more than I trust the stock. So yeah, made it happen.
Hey, I want you to touch on 2 things to follow up on that. Tell me more about the IRA things. I'll admit I'm an investor, but I don't know about that. I heard about that.
So it's fairly new. There's actually a bunch of ways that the IRS has kind of changed how you can invest in real estate. And when I say new, the IRS is very slow. So new, I don't know the exact year, but it's last 10, 15 years probably this has come out. So the self-directed IRA is just a separate investment account. You don't have to buy land. You can buy other investments with it, but it allows you to buy land. So if you have an old 401k from a company you're not working to, it's not currently being deposited to on a regular.
That one right here, my friend, right here, literally right here.
Then you can take that, partner with an IRA company. So I used a company, and I don't remember the name off the top of my head right now, but we essentially talked to them. I got on the phone with them, talked with them for a little bit, kind of walk through the process. They send you a form, you fill it out, complete it. Then your 401k company needs a form to kind of get the money moved, and you just transfer. You have to transfer it direct from your old 401k direct into the IRA account. You cannot touch it. It's like you can't pull it and then move it. It has to go direct to direct. But they made it pretty seamless for me. And once that money's in that account, we started shopping for houses or land. We wanted just bare land. Like we just wanted vacant land where they're kind of developing around. So that way, 20 years down the road, hopefully we sell it. So then you set up this account. They charge about $300 a year to maintain that account. The way it works, so you can use it to buy, if you wanted to flip a house or something, you could buy it to buy the house. And then now you have to have licensed contractors do the work. Like you can no longer do the personal work. You can't do the mom and pop stuff. It has to be a licensed contractor. And then all the bills and everything, you can never touch anything, essentially is what's happening. So like if the IRA will send the checks direct to pay your contractors, the contractors will bill your IRA for the payments. So everything is kind of just back and forth between them, but you kind of maintain and run the show. But
it sounds like it has some tax benefits, but it's a little maybe more cumbersome or strict.
Oh, there's more nuance to it that you have to kind of follow. But if you use it, so let's say you make profit off of let's say you buy a home and you rent it out, right? So I rent it out for a couple of 2-3 years because it cannot be a primary residence. It has to be an investment property.
Yeah.
So I'm renting it out for 2-3 years. All that rent I'm collecting goes into this tax-free IRA account. So then I can use all that money and then roll it over into another property. So I can build that account up and then use that to buy cash for another property.
What about property tax and insurance, stuff like that?
Yeah, all that is paid directly by the IRA.
Okay.
Yep. So
so if you bought land though, and that's not making you any money, then you'd have to feed that IRA a little bit.
Yeah. So what happens is for me and my wife, we just had, just like 20 grand or so left over. Okay. So we just kept it in the account just that way we could make sure we had a funnel and they could take care of the fees and all the taxes and insurance and everything that comes with it. That's just our method, and who knows if it's even going to work. But that's just something that I wanted to take a risk because I was tired of the stocks losing money. Yeah. It's not going in it, so.
Then you heard that New Country song that said "Buy land," and you're like, "There you go,
buy dirt, man, buy dirt,
buy dirt." That's what it is. That's right. Snap. What was the second thing I was going to ask you? God bless America.
I could go all day about this stuff, man.
Well, the IRA was one. Oh, you were talking about, and you're not the first person I've worked with that's done this, but I just want to make a point to our listeners. You took the money from your investment properties and self-funded a business. That's huge.
Yes.
Because interest rates on commercial loans, especially certain businesses being more risky than others, that's pretty high. And
Yep,
the fact they use real estate as a tool to pay for that is
exactly.
amazing. So can you talk about that a little bit more?
Yeah, I mean, so what happened? So me, my wife's a realtor. She had the best year during the COVID years, right?
Yeah.
Everything went crazy. She didn't like, she's
Sure.
not going out there trying to get leads. They just kind of fell in her lap.
Sure.
And I was working a salary job, but she killed it. And then we had a townhome. So if you think about it, if you break it all the way back from the beginning, I bought a small 3-bed, 2-bath house. I paid off all my debt, still had money over to buy a townhouse, down payment on a townhouse,
Hmm.
and then used that and then self-funded the business. So it all started from that one real estate investment,
Hmm.
and it took care of debts and then still self-funded. So um, it's what happens. We sold that townhouse actually to an investor who we didn't get a chance to list it. Megan was putting the coming soon sign up thing. It got swept up, cash ready to take it because I had tenants in there, great payment history. I never had a missed payment from them, and through 3 years we had them. Um, so sold quick, and then I used that cash, and then now I was able to pay the franchise fees, and I haven't had to take out any debt to keep this business, going because of that real estate investment. I mean, we sold at the height of the market when COVID went crazy. It was like
Hmm.
2021-ish, 2022. When we actually had it in 2021, end of 2021, gone, sold it, and then man, it paid off big time.
It's the American dream right there, buddy.
It is. I mean, you can use real estate for everything. And I mean, you can use real estate for everything. I mean, anything and everything you want to do, you can do with the real estate.
Oh, that's crazy. It's like you said, maybe I didn't make as smart a play as you. We did go way under budget on my first home because we want to be comfortable. And that's
Yep.
something else I want to touch on is what you just mentioned about your first home not having to be perfect. That's probably one of the toughest parts of my job is selling first time home buyers and the agents, helping the agents sell the first time
Mhm.
home buyer on, the fact that they're not going to have the house on the hill the first go around.
Yep.
Um, who cares what your friends on Facebook has? Who
I
cares?
know. Yep.
That house you mentioned was, you know, probably wasn't as cool as what you and your law buddies was have, some condo in the fan in Richmond or
Yeah.
something. But yours paid off a lot more because you saw the 5-year plan in that. Uh,
Yep.
the and that's what it is. People are like, oh well, I don't want to downgrade to this Rambler with its 80s construction style versus, right now I have an apartment in Spotsy Town Center with a walk-in closet. Forget the walk-in
I
closet.
know.
Who spends time in their closet?
Yeah. I know.
You're in and out, right? It doesn't matter. That apartment in Spotsy Town Center cost you 2,300 a month, maybe more now. That's not making you any money. That's not making
Zero
you a
dollars.
dime. But that little 2-bedroom, 3-bedroom Rambler from the 80s, now you're building equity
Yep.
instantly. You're
Yeah.
put
You're
from
making.
the moment you made that down payment, you got equity in it.
Yep.
9 out of 10 appraisals I've seen lately, it appraises for more than what the sales price is, even if it's $1,000. That's
Yep.
equity. Every month when you make your payment and you're paying that principal down, that's equity. And then, like you mentioned, appreciation has been very good in the last few years.
Yes.
And we're expecting it to continue because we're in
Yep.
Northern Virginia. We're insulated from other highs and lows that like the Midwest will get and stuff when there's an oil boom or something like that, or a gas pipeline. We don't have that. What we have is huge federal government presence, huge state
Yes.
presence. We got Microsoft, Amazon, you name it, we got it. And don't forget whether you love them or hate them, industrial military complex.
Yeah.
Countless alphabets, all the government
Oh,
contractors and the FBI and DIA,
everybody.
everybody. So, I mean, home prices aren't going to go down around here. You're not going to lose buying real estate in the Fredericksburg area. I can promise you.
Yeah.
Um, we were blessed enough, like you did. We took some of the equity from our first home, and put it towards a condo in Myrtle Beach. Ended up being a hard lesson. We end up ending the year in the red a little bit,
Okay.
cash flow wise, because of the disastrous property management company we have there. I'll try to keep this short, people, but
Yeah. Oh, yeah.
if you're waterfront in Myrtle, not North Myrtle, but Myrtle, almost all those HOAs have a in-house property management team that they partner with. and they're in like scan. They're just there's no getting around them. And if you legally they can't force you to use them. How they get
Yeah.
around this is if they've passed laws or bylaws through the HOA or condo association stating that you don't have to use them, but if you don't use them, your guests can't use the amenities. Well, people don't come just for the sand.
What?
That's right. That's okay, Corbin. It's not a big deal.
I mean, that's wild.
They only charge 40%, bro. 40%. So they took 40% of the gross rental income, and then the HOA went up right as we sold it. Thankfully, we got away with that to $900 and some a month. So even though we put a massive down payment, over 30% down, we lost money at the end of the year.
Yep.
Luckily, even though the market's changed, rates have gone up, stuff's not flying off the market as fast. Our condo appreciated, and it appreciated enough. We got a good enough deal that just in that 1 year of ownership, we actually listed it over. We listed it probably 30K over what we paid for it.
In a year.
We ended up selling it for like 22, 23K over what we paid for it. So that paid for the agents, it paid for the closing fees. I still walked away with money. Now I'm in the process of doing a 1031, and we're kind of on the fence on what we want to do.
1031s are tough too.
Do we want to take the tax hit and keep our money, keep our options, or do we want to make a move? So, I mean, 1031, you have 45 days to make a decision. So,
that's what I'm saying. It ain't a lot of time.
So it's tough, but still, want to have that opportunity if I didn't buy that house. You know what I mean?
It all, I mean, my dad retired at 50 because of real estate.
Yeah, tell your dad's story real quick.
Oh yeah.
I know people have got a limit on how long they'll listen, but his dad's story is super awesome, so we should with it.
My dad is he's a rock star. So he built our first home in 1986. He built most of it himself. He had a contractor come and kind of help him do it. And this guy from there he's just a factory worker. He just worked at General Motors power plant down the road, put together transmissions, nothing fancy. He wasn't making a pile of money. Like, he's just a regular guy. But he worked his rear off, put some money aside. But he built I don't know if anybody knows, but that Brawning Meineke Automotive building in front of Spotsylvania Town Center. My dad built that and owned it for 30 some years. And what he did was he went, he took everything he had, put everything into real estate. They took a huge risk because back then they didn't have electronic banking. In the morning, he went and got half the loan because you can only qualify for half. Yeah, don't turn him in. I guess it's over now. He sold it now. But, he borrowed half in the morning, had an appointment in the afternoon, and got the second half from another bank in the afternoon before they could kind of cross paths, and then built this building. Well, he built this building. I think it was $250,000, a little less than $250,000 to buy the land and build the building right in front of the mall, and held on to that for 30 years. He ran an automotive business out of for about 2-3 years, but then realized he couldn't have a full-time job, a family, and run a full-time business out of there. So he ended up renting out the building to half to Precision Tune, half to Meineke at first. And he had a triple net lease. So that means they pay the taxes and maintenance on the property too. So he essentially rented it out. Didn't have any worry about fees or anything. He would fix minor stuff around, but most of it was the tenant's responsibility. He rented that thing out for 25, 30 years, sold it for well over $1 million, and he retired. I mean, it's insane. I mean, he paid the mortgage off a long time ago. So not only did he make that much in equity, he made that much in rent. He was 10 to 12 a month in rent.
They made more in rent than what a lot of people make in a year.
Exactly.
And today's money, not just 10, 15, 20 years ago.
Yep. That's what
I'm saying. I know you'll hear me say it all the time. It might sound corny to people. It's not corny to me. That is the American dream.
It is.
He busted his ass, blue collar, invested in real estate, and he was successful.
He came from nothing. I mean, they used to heat their house with an oven when he grew up.
Mm-hmm.
So it was like he didn't come from any, and he just grinded. So that's a guy right there.
My man. But well, let's wrap this up with some insurance talk, and then we'll cut it off for now. If you guys have any questions, I am going to put Corbin's contact info in the subject line below and all that. And you guys can always hit me up if you, for some reason, can't get a hold of him. But Corbin, let's wrap this up with two things. A, I want 3 tips for insurance, whether it's buying or maintaining your policies. And then I'd like to hear you give a quick 30-second spiel about anybody that wants to be like essentially you. So if somebody wants to be an insurance agent or somebody wants to be their own owner or broker, give me a 30-second speech on that.
Oh, easy. I'll happy to do it. So, all right, biggest tip for insurance is you want to shop every 2 to 3 years. So we're capital agency, we're independent brokers. That's one benefit of working with an independent broker. I would also, I guess that's tip number 2, is work with an independent broker, because an independent broker can shop essentially the market. So we have 53 carriers we work with. I can shop all 53 for you. So every 2 to 3 years, I can drop it and we can reshop everything with a click of a button. And then that way we can make sure you're keeping your rates competitive, because if you change every year, you get an increase, you change every year, your long-term payments are going to be higher than had you stayed 2 to 3 years at a carrier. Now, I'm not saying switch every 2 to 3 years, but shop every 2 to 3 years. If it's close, I reckon you are better off likely staying with your carrier, because then you build up more tenure, which makes you more appetizing to the next insurance company. Step
Tip
two,
number 2. Tip number
yes,
2.
Tip 2, work with an independent broker. I get no benefits from shopping certain carrier. My best interest is you. Like, that's all I care about, is making sure that you get the right insurance at the right coverage, at the right price. So that would be tip 2. Tip 3 would likely be making sure, since 2020, if you have not shopped your insurance, to do so, not to switch carriers, but to check your dwelling coverage. So this is a huge thing that's going on right now. Is back in COVID times, obviously the cost of labor materials skyrocketed, inflation skyrocketed. Well, policies usually only put about a 3% increase annually on your dwelling coverage. So dwelling coverage is the cost to rebuild your home. So if you lose your home, this is all the money you get to fix it and rebuild it. So go back and check, because your policy, I've done 3 or 4 where it's been $150,000 underinsured. So on the worst day of your life, when your house burnt down or something happened, you would be out of pocket $150,000 to rebuild your home.
That's crazy.
So yes, it's crazy, but it's happening all over the place because folks get very complacent with insurance because it's just taken out of your mortgage. You don't think about it. So think about it. Go check your dwelling coverage. Make sure that it's updated at least to today's numbers. I'm not saying you have to shop it or change it, but call your agent or call us, and we will make sure that you're properly covered. All right. And then, so the tip for
that last tip's a good one. I've never thought about that, but houses have appreciated a lot, and the like you said, cost of building right now is a lot more than it was 10 years ago.
Yes, exactly. And that's the, so if literally 2020, if you have not shopped insurance since 2020, today is the day, not tomorrow, not next week. Today is your day to shop it. I'm just, do not wait on that, because that's when you just don't want to play around with stuff like that. And the little spiel about if you want to open an insurance agency, I just warn you. So I came from corporate America. I've been in insurance my entire career. I've been a lawyer for insurance. I've done anything and everything you can do for insurance. I've touched it. I've even sued insurance companies as a lawyer. And the thing you've got to get ready for is it's not a get rich quick scheme. You're not going to jump into this industry and you're just going to make a pile of money. It's a long-term game. So you have to be prepared for that mentally. So you come in, you got to be one grind. And I mean grind. We're not talking a 40-hour work week. Like, you're easily doubling that to start to get this business off the ground. But then don't expect to pocket a lot of cash up front. So have your reserves ready. Hopefully you invested in real estate the right way. You can use that to get your reserves right, and then be ready. But the long-term benefits of it is so great, because you're getting paid every year on those old policies you booked, the ones that stay. So the long-term gain is huge, but you got to be ready for that short-term issue.
I gotcha. So insurance is a long-term play.
Oh yeah.
Get as many of those policies as you can, and then the ones that auto renewal and whatever, that's payday after payday. So that's going to accumulate. That's what compound interest, basically, right?
Yeah, it's pretty much. I mean, that's my pension for my rest of my life. Like, that's my pension now. I don't have a pension with corporate America, so I went and made
Yeah.
one with this.
I got you.
And just you take care of people, and you will have those long-term clients. So
Let's
you
say
just
I'm
make
not
it.
ready to open my own brokerage, but you know, I want to be an insurance agent. What are the first steps for that? Do you have to get licensed, or what's the deal?
Yeah, first step. So there's no degree requirements, anything like that. All you have to do is literally go get what they call property and casualty license from the State Corporation Commission of Virginia. Easy process. You take a test. They have prep classes you can take, which are pretty helpful. And then you go take the test, and then you get your license, and that's it. Now, you have to hang your shingle under something. So you either have to form an LLC or a company to sell under, or you'll need to, join a company to sell under.
Gotcha. Okay.
So,
Well, what about you guys? I know you guys have been growing a lot. Are you guys taking on insurance agents? Experienced rookie?
yeah, we've actually gotten approached. This last 2 weeks has been kind of weird. We really talk about it because we got approached by somebody about 2 weeks ago who used to own a farmer's insurance agency. We're kind of talking. We're hesitant because we're just so particular about customer service.
Yeah.
That if I just feel like this person's not going to be as attentive as I am, then it's just not the right fit for us, for an agent. Now, maybe for, an admin or something in our office for our own internal stuff, you don't need but so we are going to need to hire. And it's probably going to be sooner than I think we'd like to admit.
So that was always a concern of mine going with
a
independent broker versus a regular company is communication and customer service. But, I can testify to Corbin's brand here. Him and Jeff are great about answering their phone or getting back to you within a reasonable amount of time. Still better than, answering 10 questions on a 1-800 number just to get somebody maybe. So,
and that's the thing, with us, with an independent broker, another reason, I guess, kind of going back, that an independent broker is good is they fight for you for claims issues. So if you work with an agent who just works for that carrier, their carrier is kind of in their interest. My interest is my clients. I will fight. That was my last position at Marsh, was fighting for large corporations like such as National Geographic, and it was to fight for coverage. So we are equipped to fight for our clients if we need to. Not saying we need to do on every claim, but the ones that need it, we're there.
Hey, man, I appreciate you. Appreciate you joining us, guys. If you have any insurance questions, you want to get a quote or, see if you have the best policy right now, hit up my man Corbin. If you think about a career change, hit him up.
Yeah.
He knows his value. He's not worried about competition. I mean, it's a good chance he might be a fit for his team. He's a lot like me, believes in responsible growth. So he's not looking to hire 10 people right off the go, but slowly build up his company. So hit him up, and appreciate you, man. I appreciate it. Really love your movie, Along Came Polly. That was great. Until next time, my glass is empty. I better get a refill, and you better get your first one.
I know. I got to go get mine right now.
All right, dude. Appreciate you.
Appreciate it, man.